Hi, and welcome back again to a BuyAlert, VolAlert on ASTS, where some big time repeated option buying, especially on the call side, with a big time rally, sets up for a big time vol capture trade as IV just exploded off the chart. So let's jump in and take a look, shall we? First of all, here is the chart as you can see on ASTS, AST Space Mobile. Shares were pretty much just hovering right around that 10 level. Then they started to move. You can see post earnings, huge pop here, brought it up towards the 30 level, then continued higher. We're seeing massive call buying coming in as well, certainly pushing IV, as you can see here, to the highest level we have seen basically all year. This is even after earnings. Here you can see the usual vol, kind of crush post earnings. Stock did get to overbought levels, certainly on a technical basis. Bollinger percent B well over 100, 9-day RSI over 80, MACD by far the highest level we've seen all year. Shares still trading at a huge premium to the 20-day moving average. So setting up for a vol capture trade with some edge. Taking a look at the vol here, pulled it off over the past 3 months using a 60-day 40 delta call IV. So slightly out of the money call option on 60 days, but it certainly applies across the term structure of vol spectrum. You can see vol had collapsed kind of on earnings here and then has just exploded to the highest level we have seen over the past 3 months by far. Current IV, as we saw, now at the 99th percentile, which means it's the highest it's basically been all year. So we can take a look. I pulled off going back to July 10th, right, which would have been this period in here when IV kind of, came back down, you can see. And we're going out to January of 26 because that's where I elected to kind of take a look at a trade. I think it's more interesting out there, to say the least. But you can see IV back then, the stock was around 12 bucks and change, right? But IV on the basically add in and slightly out of the money options, right? Trading under 100 at the mid 90 level on July 10th, right? Stock at $12. You can see that stock then popped to over 32, actually traded to 37 intraday, pulled back, right? But is traded up to 39 as we saw earlier on that price chart there, right? But you can see now that January of 2016, 55 sell strangle, right? The 20 put selling that, selling the 55 call, which is, 22 and a half points roughly out of the money, right? You could receive over $20 for it, almost 21 bucks at 20.90. So from a P&L perspective, right, you have zero downside, right? If the stock goes bankrupt, right, and goes to zero, you still make a little bit of money because you're able to, in essence, sell that $20 put for over 20, right? And the call would expire worthless. To the upside, the break even would be somewhere right around 75, which is simply 55 plus the $20 plus premium received. So the stock would more than have to double to get in trouble here. And you can see you're selling IV, which previously was trading well around 100, right? Now trading right around 120, 125 on the puts, 120 on the calls. So taking advantage of that big option buying. You can see this is from Friday's close, right? 157,000 calls, almost 100,000 puts have traded. So volume off the charts here on this particular name, and it bleeds out across the entire spectrum. So even out to 2016, as we saw, you get this huge jump in IV, right, which was trading under 100 earlier, now at well over 120, right? So certainly a massive jump in IV, especially longer term IV has a much bigger effect. And to see what we'd make if we get a reversion back towards that 100 level, right, simply use the option pricing calculator and put in the theoreticals, everything remaining equal except for IV now at 100. And remember, it was below 100 not too long ago, right? that January 2026 strangle we looked at, right, which currently trading around 2090, would be worth about 16. So you'd pick up about 5 points, right? You could sell it for almost 21 right now. If the IV drops anywhere back towards 100, you'd be able to cover it for 16. So certainly a nice trade with plenty of cushion. Again, zero downside because you're selling the strangle, the 2055 strangle, for more than 20. So have zero downside risk. To the upside, you start to get in trouble if it gets beyond 75. Stock right now at just under 33. Also took a look at some straddles, right, for those who like that sort of trade structure, and also some interest there as well. So went to July 29th, right, which is simply going back to when IV was back at that low level, right, or the level that we saw it kind of pop from here. You can see IV basically hovering right around that low 100 level, right? Stock at 1887. The January 30 straddle, right, selling the deeply in the money, right, by 11 points and change call, and the well out of the money call, right, could have been sold for just over 23 bucks, 23.30. Fast forward to Friday, right? We can see that even with the stock at 32.86, so much closer to that $30 strike price, right? Now the calls are in the money by a couple points. Puts are out of the money, but that straddle exploded by basically just over 9 points, even with the stock moving to a much more advantageous price point, right? From basically 19 bucks, right, let's call it, to 33 to kind of use rounding errors, right? So we saw the stock move towards that $30 strike price, yet the straddle exploded in price. Why? Because now IV 115 roughly on the calls, 131 on the puts. We can see before it was basically just over 100 and 115. So IV has absolutely rocketed up. Taking a look at the 35 straddle, for those who like to maybe lean a little bit more bullishly with that buying out there, going back again to early August here, with the stock now at 2044, selected a similar but slightly different date. You can see that January 35 straddle, right, was priced just over 25 bucks, right? These in the money puts, and they're in the money by basically just under 15 points, right? Trading at right around 20 bucks. The calls well out of the money, right? 15 points plus out of the money at 6 bucks. And that IV just slightly under 100, just slightly over 100. Let's use kind of an average of right around 100 on that 35 sell straddle back on August 2nd, not too long ago, just a few weeks back. Fast forward to Friday, right? We see with the stock at 32.86 again, that $35 sell straddle has moved up almost 10 points, right? So it's still out of the money on the call side, but we're much closer, right, to 35. We're at 32.86, just out of the money on the calls and just in the money on the puts. Before, we were well out of the money on the calls, deep in the money on the puts. Everything being equal, you expect that sell straddle to go down in price, but instead it exploded. Why? That IV that was hovering around 100 on average, now 127 on the puts, 118 on the calls. All that big shorter term call buying, right, has bled through to the longer term options, and we're even seeing some decent volume out here in the January of 26. So this is a way to take advantage of this big time explosion in IV. And again, we're able to sell that $35 straddle, right, for 35 bucks. So zero downside, right? Literally zero, right? The worst you can do to the downside is break even. Upside break even, 70 bucks. Stock would have to more than double to even get in trouble here. But more importantly, just looking for that IV to revert back, right? And I put a couple scenarios. It's trading again that reversion factor. Currently it's trading at 127 and 118, right? Let's call it about 122 on average. So it reverts back towards the 110 level, right? That straddle, which was going for 35, would be theoretically worth 31.50, right, with IV at 110. And you can simply look, here is the call and the put prices here, right? roughly 16 on the puts, 15 on the calls, give or take, and you'd make a nice 3.5 point gain just for having IV revert back to 110, not even close to that 100 level it was before. If it did revert back to 100, right, your gain would be 6 points, because it'd be worth about 29, a little over 14 on the call, just under 15 on the put. So this is what we like to identify here to take advantage of these huge spikes, right? In implied volatility, you can see the stock just ripping to the upside, caused by big time unusual option activity on a stock that is getting out over its skis in a big way, right? This is very similar to the Rocket Labs one we did earlier, where all it takes is for the stock to just slow down going up, right? And some of the buyers who will pay anything to get in starting to get out, or the volume starting to slow down. Then you see that reversion back, and you can take the trade-off for a quick profit. So hopefully provide some insight into identifying trade opportunities. Until next time, as always, take care.